Thank you everyone for taking the time to discuss this important subject, ESG. We all see ESG gaining significant momentum. I think in 2020, we heard the NASDAQ CEO say that 2020 is increasingly becoming the tipping point year for ESG. The main theme at the Davos World Economic Forum was stakeholders for a cohesive and sustainable world with main focus on ESG metrics. So I think what we're here to discuss is what is the hullabaloo about ESG? Is it just a feel-good fad? Does it help companies become more resilient? Or does it potentially lower returns?
Yeah. And with that background, we'll also aim to cover some pertinent questions such as what are funds and companies doing to essentially integrate some of these ESG principles into their investments and functioning strategies, and whether it's yielded any positive results. The last year was sort of an eye-opener for all of us. COVID, at least in my lifetime, we saw a pandemic hit for the first time. So has the pandemic, COVID, really been an eye-opener for investors and fund managers alike regarding some of these ESG principles and sustainable investments? Is COVID, now a reminder to all of us that ESG may perhaps be a necessity rather than a choice in terms of investments? Through this webinar, we'll of course aim to deep dive into some of these questions, deliberations, while having conversations with some of our esteemed panelists who are present with us here. With that, I would like to first introduce.
We just move to the next slide, Devas. We'll just move to the next slide, please.
Yeah. I'd like to first introduce Guy Alexander. He is an ESG manager at CDC. His objective is to improve the quality of ESG management systems at CDC's manager entities. While doing so, he researches and also provides advice on ESG risks and opportunities and monitors ESG issues. Our next panelist is Shilpa Kumar, who is a partner with Omidyar. She focuses on digital ID, governance, citizen engagement, and property rights initiatives. She also leads policy work and financial inclusion. The last introduction from my side is, of course, my partner, Taranya, who is an M&A corporate lawyer with Khetan & Company, advising on mergers and acquisitions, private equity, restructuring, and strategic investments. She also specializes in assisting investors with integrating their ESG principles into their deal dialogues. Taranya herself is particularly glad that ESG may now be considered primary, if not peripheral, to the progress of this org. We welcome these panelists on today's webinar.
Welcome to you all, and I have the privilege of introducing Gaurav. Gaurav is the head capital team at the British High Commission. He looks at the UK's development investments. And having lived and worked in India and global markets, he brings to bear his expertise in impact investments, funds, and inclusive corporate development. Manav is the CEO of Neev Fund. He has been a PE investor and banker for many years, including the infrastructure, healthcare, and tech space. And my colleague Devas is a funds and corporate lawyer from Khetan. He specializes in advising Indian and offshore fund managers on structuring and setting up private funds. Of late, he's been advising various domestic and offshore managers in setting up impact-focused funds. He's an environmentalist and is very keen to continue to see ESG take center stage globally and in India. Welcome, everyone. With that, we move to our next slide. Okay, so E represents environment, S social, and while we may all be familiar with what each of these represent, let's just turn to the slide for a quick recap. So environment includes waste resource management, climate-based policies, emission of greenhouse gases, energy consumption. Social includes attrition rate, training, human rights, healthcare policies, gender parity, and child and forced labor. And governance, of course, gender diversity, independence at the board, code of conduct, and the anti-bribery code. So I think while we're looking forward at ESG, it's always interesting to look a little backward. And I think all of us know about the report titled Who Cares Wins by Ivo Nordfeld, who's a certified analyst. And he made the case in that report that embedding ESG principles in capital markets actually makes good business sense and leads to more sustainable markets and better outcome for societies. So there seems to be a strong argument that if a company wants long-term positive financial health and strong resilience to bounce back from challenging times, it must take care of the environment, its people, workforce, and it needs to ensure that its stakeholders' interests are protected with good governance. So I think what we want to explore with our panelists here is whether ESG is worth exploring. And so I'm going to talk to Devas now to give us a few examples of what ESG means to companies and some interesting statistics. Can we move to the next slide with that, please?
I think no conversation can be complete without specific examples. If you look at this slide, ESG focused funds, there's been a steady growth in terms of capital commitments being raised by ESG focused funds over the last decade or so. It's our assessment that integrating some of these ESG principles is becoming increasingly important for the alternatives asset industry. Asset allocation by institutional investors to not just ESG compliant funds, but also funds which are focused on an impact is definitely been on an uptake, with various fund managers somewhere also recalibrating their strategies to essentially meet with this increasing demand. According to, in fact, one of the reports, over the last decade or so, almost 4,400 ESG compliant funds have been raised, totaling to an aggregate asset allocation of about $3 trillion. Of all the capital raised, in fact, last year, almost 43% went to ESG compliant funds, as against 37% in 2016. So as we see that there is definitely an increasing trend towards capital commitments for ESG and impact focused funds. Various large private equity giants such as Blackstone, Apollo, Carlyle, all of these have essentially included ESG mandates across all their funds, irrespective of the strategy. In fact, even at Kepan, we've seen a fair bit of interest and a significant uptake in interest on impact-focused funds. And this is both from a GP side who are looking to set up these funds, as well as from an LP side who wish to participate and partake in some of these opportunities. As we go to the next slide, even on the performance matrix, if we see the MSCI index, ESG compliant companies, which is the top graph, have definitely outperformed their non-ESG counterparts over a significant period of time. In fact, one of the research reports by Fidelity also showed that stocks with the higher ESG sort of ratings, in fact, outperform their non-ESG counterparts on the listed equity side. In fact, there is another report by Preqin which said that even on the unlisted private fund side, performance of ESG focused funds was really not way off the mark compared to their non-ESG counterparts. With that background, with some of those statistics and examples in mind, Guy, let's start and initiate this discussion with my first question to you. Would you broadly agree with these statistics? And if yes, why, according to you, is it so important for institutional investors such as yourselves to follow some of these ESG and impact principles?
Yeah, thanks, Devas, and good afternoon, everybody. I think from my perspective, I'm not surprised at all to see some of the statistics that you are showing today, and I think that there are very good reasons why institutional investors have been pushing this agenda as well. It's certainly true for CDC that we would push an ESG mandate into all of our private equity funds, and indeed all of our companies more broadly. I think the reasons why are interesting, and I think there's some push factors. I think it's domestically in India and as it elsewhere, regulation is pushing this, but also response to incidents and also sort of the move towards more transparent and sustainable indices. But I think ultimately investors just see this as a move towards good international industry practice. There's been a lot of alignment over the years about sort of defining good practice ESG outcomes. So for CDC, for instance, our code aligned with the IFC performance standards, which if the audience is unaware, I think that represents a very sound benchmark to what you should want to aim to do. And if you can get there, that gives you access to capital from institutional investors. It gives you potentially access to premium markets, and that's why we do this. The only other point I'd make, Divas, up front is that I'm really not surprised by the graph that you have on the screen there, because I think that there's been a bit of if you look to demystify ESG a little bit, it's essentially looking at the operations of companies and getting towards trying to just manage those operations effectively, efficiently, and well. That relates to the slide that Tarunya started with at the beginning. And I think if you see it in that lens, essentially good ESG management equates to good management companies wholesale, and that's why you would expect to see them outperform the market.
But Guy, I have a question. Do you see resistance when you negotiate and sort of want all of this into the documents, into strategies? Do you face any resistance in negotiations?
Yeah, there's always resistance. I mean, and I think that that's actually a good thing, because I think that in some ways the need to negotiate and help companies understand as an investor what the good practice outcome we're looking for is a healthy sign that there's serious commitment to the practices. But I think that ultimately, the investors, you need to go back to explaining how this leads to more efficient and effective operations. And once there's alignment on that, I do see resistance fall away quite considerably.
Oh. Lovely.
Interesting, Guy. So it is definitely important from an investor standpoint, Guy, and that brings me to just transitioning a little towards Shilpa. Now, that's from an investment standpoint. From a sector standpoint, Shilpa, I understand Omidyar focuses on responsible investments in sectors such as digital society, emerging tech, education, and financial inclusion. How do you decide on the sectors which need your investments? Because I understand that each investor's impact assessment may be different. Is it the impact which drives the sectors, or is it really the other way around?
Yeah, thanks, Divas. So, for us, it really begins with first asking the question, what's the impact we want to drive? And therefore, we actually come at it from, that's the first question. The second question is returns, and I will talk to you about both. And when we start with saying what's the purpose, we've defined actually our purpose in serving really what we call the next 500 million, which is the 500 million or so people who we feel are the aspiring part of India and who really want to, in a sense, look for a much better life. And once we kind of defined that to be our purpose, then really the next step which we ended up looking at is how do you do this? How do you support entrepreneurs who make this happen? And again, the context of technological change in India, supported by the fact that India actually has a number of great entrepreneurs. I think these two things came together to kind of say, okay, that's the angle with which we will get in. And then we defined, in a sense, what meaningful life or a better life means in terms of access to better services, livelihoods, and even in terms of increasing productivity. And therefore, to really elaborate, the sectors which we look at are education, financial inclusion, governance, digital society, and property rights. All of these talk to these three objectives of really meeting a better life aspiration.
Interesting, Shilpa. And just in that light, Shilpa, how do you really structure investments? Because it could be a fairly new company without various other investors. It could be a company with existing investors. How do you really structure and get around some of these nuances so as to incentivize not just yourself, because you are looking at an impact-focused investment, but also the underlying company vis-a-vis all the other investors who may already be there?
Yeah. No, great question, because if you're going to make an equity investment or a seed investment, how do you ensure that the entrepreneur stays committed to the journey? And Again, because our first question is impact, really the way we select our entrepreneurs really becomes the biggest, question for us. And we spend a lot of time on that to try and see, is her aspiration in growing the business committed to the same, objectives that we have? That's an area where we spend a lot of time. But having said that, we also have certain impact metrics which we build into the proposal. Of course, they are, in a sense, things we will track. It's not, money is not conditional upon them in the case of an equity investment, obviously. But these are things which we track, at certain periodicity with our entrepreneurs. And that could be things like, diversity. It could be, the governance kind of areas. And more specifically, we then break these up into maybe some metrics of direct impact. How many people are you reaching within our next $500 million target? What's the inclusivity in terms of people really earning incomes below a certain point, and even diversity. At the same time, because sector impact matters to us, we also look at indirect sector impact metrics, and those could be what's the capital that you can subsequently raise? Are there other people who imitate your business model? And even, frankly, governmental or policy change. So it's a combination of both, really making sure we select the right entrepreneur, and then tracking progress through some metric.
Very interesting. Shiva, one last question from me to you, and feel free to not open your personal investment styles, etc. to Medyar. But pursuant to some of these impacts actually being achieved, what you have perhaps whether you've written down in your investment agreements or agreed to with your entrepreneurs. Are there any tangible, intangible benefits which flow to the company or these entrepreneurs directly if those impacts are in fact met during the tenure of the investment? Or it's more from a reporting perspective and for your internal governance perspective that you track these impact metrics?
Yeah, I think more than anything else, frankly, it's the joy of proving the model that not only can you really invest and have substantive social impact, but equally you can make good returns and even exit. So, kind of looking at that whole end-to-end model, I think that's the biggest, winner. Having said that, I find also Omidyar becomes an interesting destination point for a lot of entrepreneurs, because not only we have a view on the sector, but because of what we call our dual checkbook, we not only make equity investments, but we also, in a sense, support that with research in the sector. We support that with enabling investments which are not necessarily equity investments, but sectoral investments. Yeah, that's it. Yeah, thanks.
Wonderful. Thank you. Thank you so much for those insights.
Very insightful. Thank you so much. Gaurav, I think turning to you, I don't know whether you agree, Gaurav, but in our experience, we've seen that companies with good parameters, actually good ESG parameters, call for lower legal and regulatory intervention. And it improves the brand and reputation of the company. And attracts ultimately more investment. And like Divas said, these slides also show that the ESG index actually recovers faster from shocks. And we all know you're passionate about this. So I think all of us want to understand why you're spending the time and energies in this space.
Thank you. I agree with all the panelists. And what I want to say is that, it's something which is really important for all of us, and we're all in it together. So governments as well can play a very important role in unlocking green finance, green investments through setting ambitions. I mean, the UK has set its net zero target, and that has galvanized the whole industry and set of entrepreneurs. And similarly, India has set its target for renewable energies to 2030 and stretch targets that Prime Minister Modi has done. And that has galvanized the whole industry set of entrepreneurs. And I think governments can play a role, not just through ambition, but favorable policies, trying to come up with the right incentive structure to really shepherd the industry and orchestrate it in the right direction. that they want the world, in fact, to go to. And incentives like that, can take the form of tax or so many other types of incentives. And lastly, governments also put their own capital to work, and we have done it. So with Government of India, we have made our capital to work on environmental, social, and governance in India through our own investments, because we have to create that, we have to walk the talk and seem to be creating those examples. And we've done that through a collective investment in the Green Growth Equity Fund, which was looking at environmentally green sectors which are going to take India on a low carbon path. They must many of the things that Shilpa said about inclusion, genders, people with disability. As we are going ahead, we must take everybody along with us in that sense, and that is able to then mobilize a lot of capital. And when you get perhaps to Manav, he might also give you an example of how incentives can be mainstream into the fund management models, because I don't think ESG is just an afterthought, and it should definitely not be a checklist, to Devas's question that he was asking us earlier. So it has to be something that we're doing consciously. We are passing on that shared consciousness about ESG within the fund management industry, and together to our investee firms and entrepreneurs along with our funds, as a very key component that goes together. And the reason for that is also because of what Tarunya, you said. ESG factors are now impacting a company's bottom line directly, and they're also affecting a company's reputation. And business leaders and investors around the world are recognizing the potential costs of not just managing the ESG, or the cost of not managing the ESG risks. And as a government, we are only too conscious about things that could go wrong, with any of the DFI investments. And there was a recent OECD report as well, which talked about 17.5 trillion globally as professionally managed money that was looking at some sort of ESG. And of course, Devas talked about, and you gave examples of how actively it's being looked at. So it is really important. There is a role for government. There is a role for enterprise. In fact, there's a role for all industry people to come together and make a complete jump and push into this. Thank you.
Excellent. And I think, like you said, I just want to hear Manav's reaction, because Manav, Neev is, of course, a partnership with SBI and DFID. So your thoughts on what Gaurav just mentioned?
It's first of all, thank you for having us here. It's a fascinating topic. I think Gaurav and Shilpa alluded it. I'll just take 30 seconds to just try and unpack from our perspective, because we tend to use ESG and impact interchangeably, and Devas said that what we try and do is try and ensure that we understand impact at three different levels. One is how it impacts beneficiaries. And that's what Shilpa mentioned, the people who are aspirational.
I'm just going to request you to pause a moment. I think there's some disturbance, and the other panelists.
We can hear Manu very well. Yeah.
Okay, please carry on.
Yeah. So at the first level, it is about where the money is impacting the beneficiaries. Gaurav mentioned people who have been left behind. Shilpa mentioned about 500 million people who need access to services, access to markets, products, financial inclusion. Then there is an enterprise level that you need to impact or work with, which is the policies, governance, gender, inclusion, how you manage your supply chains, anti-corruption, anti-money laundering, good governance practices. And at the highest level, you talk about policy. So you're not really creating ESG, you're creating industries, you're creating an enabling framework, which is not necessarily benefiting your particular investment, but benefiting the entire ecosystem. And Gaurav mentioned a bit about that as well. So when we talk about impact, any investment needs to impact at all three levels. And when we go about raising money, many times we've been asked that as a fund manager, what is your business doing in talking to the government? And our answer to that question always is that if it is not our business, whose business is it? Who will help the policymakers create those right policies if it is not people who are putting their own money in, and in some ways are perceived as honest brokers, not necessarily lobbyists or industry association? From our perspective, the biggest sustainability actually comes from the last bit. The second level of sustainability and impact comes at the enterprise level. And the last bit, to be honest, to the numbers to be really right, is when you impact directly. Now, why is it also important to understand this is that we do not want to create a private equity ecosystem wherein different funds are going about tom-tomming how much impact or ESG they are doing. Somebody goes and says, I am impacting 40 million people. Somebody says, I'm impacting 80 million people without necessarily an industry-wide accepted practices. So while we are creating this ecosystem or co-creating these ecosystems together with panelists as distinguished as they are, it is important to understand that impact means impacting everything that you work on. And FCDO, which Gaurav leads, has helped us create those ecosystems which help us look at impact at all three levels: beneficiary, enterprise, and the universe that they reside, and then the policy level.
Understood, Manav. So what I hear you saying is that it has to trickle down from the top to the bottom and at absolutely all levels, in fact, at all levels.
Yes, and at each level, Tarunya, it has a different effort and a different.
Yeah. Yeah. And just before I move on, I want to understand if my voice is okay. Am I audible? Because for a minute there was an issue.
Yeah, we can hear you well.
So I think, Manav, that's very helpful. I think very clear. And while you sort of work through all of this, Manav, what I want to understand also is that is it sort of, does it stream very smoothly? At what levels do you face challenges, or is it something which you've just sort of had to be patient and watch it play out?
It's a good question, and the way we try and answer is, in some ways, some of the panelists have already mentioned that, Shilpa said that you start looking at what does my investment mean to the person who it eventually flows down to. That obviously has to be a starting point. And once you answer that question, then you answer the second question is that when I'm investing in an enterprise, am I just creating or helping create that enterprise or strengthening that enterprise with all those nice policies and board governances, or am I also helping create backward and forward linkages? For example, just to bring it alive, we've invested in areas where typical investments don't go in. So, for example, when you invest in say Lucknow or Chandigarh or Bhubaneswar, you will not find talent there. You will not find big 4 or big 5 auditors happy to go and audit companies there. And once you have one company, you do have smarter people going there and creating that ecosystem. You do have big 4 or big 5 coming and auditing and creating the forward and backward linkages. You essentially create a set of enterprises which can then help grow those businesses. And the third level, obviously, is then when you start looking at an industry, you say that are we the first one in the industry, or are we early ones in the industry, and then take that additional bit of risk. Obviously, to take that additional bit of risk, you need people like Gaurav with the vision and the patience to support you. But assuming you are fortunate enough to have some of them, then you are able to take those risks. So, for example, when we invested in a company which is creating the modern grain silo system in the country, 10% of our food goes waste, right? I mean, you start by tackling that problem. Now, we were the first one in the industry. And like any industry, it went through ups and downs. The government came and changed the policies, for example. But we could then go to the government and suggest to them, please look at what we're trying to do. And if you do not do it in the manner that should be done, which is global best practices, and there again, we lean on people such as FCDO to bring us those policies. And Shilpa also mentioned that they also help create those research. Government was able to listen to what we said, and then the industry got created. Now, once you have the industry, you obviously benefit because you are an investor there. That creation of the entire ecosystem at the policy level, at the enterprise level, and at the beneficiary level is what we define as impact.
Manav, that's really helpful. That's very helpful. Thank you so much. I think with that, we'll move to the next slide, and we'll take only a couple of minutes on this slide. We're calling it the whiteboard slide. I think now that we all agree that there is a good business case for ESG, what we want to very briefly do is look at what the Indian legislatures really think of it and how they viewed this over the past 10, 12 years. Have they done anything about it? Have they incorporated any of this in our legislative landscape? So let's just look at this very, very briefly. Divas, I would ask you to help us, help the audience with how to work this.
No, absolutely. I think it's about time to nudge and wake up the audience a little bit because we can understand it's right after lunch. So here's where we'd like our audience to help out. In fact, as both Gaurav and Manav mentioned, policy intervention is as important as the principles which are being driven by some of the investors. You'll see this blank space in front of you. We would request all the audience members to log into menti.com and use the code which is coming on the screen. Following this, if you could set out some key milestones in the Indian legislations which you may have seen in the last decade or so. In that blank space, feel free to put in your thoughts and share it with us. And we'll take a short moment to discuss some of those key legislative updates which have at least come on the policy front and regulatory front in India.
Yeah, so like Divas said, just enter www.menti.com and use the code that we'll give you all a few seconds to just enter, and then discuss only those which have been very key. We won't take too much time on this slide.
The audiences seem to be quite.
Yes, I see there is a lot of action. So let's just quickly, I thought we'll have to wait a few seconds more. Okay, so I will take this one first. Can you see my arrow here? The RBI letter to scheduled commercial banks, because this was one of the early milestones, very early in 2007. And the messaging here was very clear that, look, financial institutions, you play a very important role for sustainable development because you're contributing to the funding of developmental activities. So you should be the first responsible citizens. So that was very important early milestone. Divas, you want to go?
No, absolutely. And this was, in fact, also one of our slides where we were talking about the MSCI index in terms of what are ESG compliant companies and what are non-ESG compliant companies. So, in fact, these guidelines were introduced by BSE, which were intended to act as a framework of sorts for companies which are already listed on BSE to be able to show a separate performance index on sustainability and impact in addition to their existing reporting on the stock exchanges.
Excellent. And while we talk about listed companies, Devas, I'm going to take the next one on SEBI circulars. These SEBI circulars were very important because they made it mandatory to disclose for the top 100 listed companies. Okay, and it was top 100, now it's top 1,000. And disclosures, I think the panelists may agree, are important because they help build data. And data in turn helps with your indices and your ESG scoring, which in turn helps attract investments. So that was a key milestone for sure.
Yeah, I think one important aspect, which I'm not sure if it's gone below, CSR, of course, has been quite relevant and it's been there since the Companies Act, the new Companies Act came into the picture. One important aspect is also the SEBI Stewardship Code, which came about last year, which essentially mandates all domestic funds, including private equity set up under the AIF regulations, all mutual funds, to frame these stewardship policies internally, which would act as which would in fact improve the engagement of some of these funds with their underlying portfolio companies on various parameters, whether it is performance, strategic initiatives, risk issues, conflicts of interest, ESG, etc. And this particular framework draft, or rather the stewardship code, obligates various fund managers to sort of formulate a policy of sorts in terms of how they wish to fulfill their stewardship obligations and responsibilities. So that's one key regulation which came out, at least from the SEBI front, on some of these, not just ESG, but across all good governance and good investment parameters.
Yeah. And I think, Divas, I just want to end with, I think it won't be complete if we don't talk about CSR in a little more depth here, which is corporate social responsibility, because that was a landmark legislation which made it mandatory for a 2% spend based on your turnover, net profit, etc. And we've seen a flurry of amendments in the last, especially in the last 9 months, saying, you know what, it's not enough to just allocate that amount, follow it through. It has to be followed through. There has to be continuous monitoring. We've never seen all of that thought through like the way it is. There's a mandatory impact investment report that has to come in now for companies which spend more than 10 crore. And this I thought we think is a huge jump from where things were. So unless you want to take anything else, we can move on to the next slide.
Yeah, enough of boring everyone with legal jargons and.
So we can move on to the next slide, please. Sorry, there's just one thing while we move on to the next slide I do want to say, which I think Guy, you also alluded to the last time, which is that just because there is all this legislation, I think that's not enough. Companies must be conscious of international best practices, which, like Manav said, it sort of comes through with institutional investor policies right from the top. So I think we should be conscious of marrying those two together. So I think then now let's move to the next slide, which absolutely one has to talk about. It's been talked a lot, but I think we will hear some interesting insights from the panelists here. We've heard the CEO for UN Principles for Responsible Investing. She stated that COVID has propelled ESG investing in a substantial way. But interestingly, we've seen companies respond very differently to this situation. And I think this response reflects where ESG stands on their priority list. We've seen companies like Diego India, HUL, Danone, they just rose up to the occasion and took care of their community, their people, stakeholders. We also heard stories where suppliers, for instance, to Amazon, forced their COVID-infected workers to continue working. And of course, Amazon terminated their supplier contracts. But these are some of the things we're hearing. And Divas, I think you had something more to say here.
Absolutely. I think it wasn't always doomsday news. In fact, the busiest practice right after COVID hit was, in fact, our employment practice. But we saw news of various companies, in fact, increasing their employment pays, adding new employees to their workforce, etc. And there was, in fact, this interesting survey which was conducted by JP Morgan, which effectively said that COVID is now, in fact, a positive catalyst for the focus on ESG and ESG growth over the next 3 to 4 years. With that background, Manav, let me pose my first question around this to you. Do you think COVID has really been a wake-up call? Has it somewhere changed the paradigm, perception of people to now focus on ESG? That yes, while growth, while performance and everything is important, but let's not take our focus away from ESG. Do you think that it's really changed things, stirred things up?
Yeah, no, I think to be honest, if I were to be brutally honest, I think it is still to be discussed or decided. I work in the SME space, so the entrepreneurs at the SME space do not always have a luxury of cash flows to support. But what we have seen is that the conscious entrepreneurs have actually gone that additional mile and helped and support their employees if that is the intent of ESG. At a separate level, the incoming investors have obviously started looking at more ESG compliant, if I could use the term loosely, for investments. So these two positive changes have happened. But if you were to go to a cash flow starved SMEs, and the pain there is palpable, would they have an ability to support some of the initiatives they had without the cash support? I'm not sure we're still there yet.
Right.
I'm not sure I answered the question in any way, but that's the impression that we got.
That's a very helpful perspective, Manu, because while it may be a wake-up call for many, but somewhere also at the SME stage, there may be a flurry of companies which may just be striving to stay afloat at this stage.
Yeah, but I'm curious to know, Shilpa, considering you have your strong policies, what steps would you have taken to protect workforce, improve governance, to tide through all of this? Or are you still in the process of figuring out what is the right way to address this?
Yeah. So really, COVID was such a, phenomenal event. I think the first thing, we did was really look at our portfolio in its entirety to kind of see where vulnerability lay, vulnerability in terms of maybe businesses themselves and our investments. And I think what we saw was, our entrepreneurs really having to cope with some pretty seismic changes. In some cases, it could be that there was a need to downsize. The enormous headwinds really reflected in the need for downsizing. In some cases, it was really the need to shore up with cash and extend runways, even in the middle of a very uncertain time period. And I think that's what we focused on doing, which is really, how do you strengthen the hands of your entrepreneurs to deal with these very uncertain times? And that was our focus. But the biggest focus, Tarunya, if you ask me, was really the leaders themselves. Because at a time like this, what they really need is maybe someone to lean on, to discuss things with. In a sense, how do you cope with situations? It could be business situations, it could be softer, situations to deal with exits. And I think that was also one of our big focus areas, just helping leaders and entrepreneurs navigate these difficult times.
Yeah, so but I think it's great that there was so much focus on people that you actually sort of felt the need to draw out these plans, Shilpa, because I think a lot of people just put aside the S of it, really, the social side of it, and just focused on how to get back to getting returns, profits, and all of that. So you sort of nipped it in the bud, just went straight to the root cause and sort of addressed it at that level, which is great. So I think.
I agree, Tarun, and very interesting insights from both Shilpa and Manav that the existing portfolio had to be protected. Special situations demand special attention. While one is on the existing portfolio, just transitioning slightly in terms of this is the existing, the current and present. From a future perspective, with COVID, various sectors cease to be relevant. In fact, we were in the middle of structuring and setting up a few sector-focused funds. And the moment COVID hit, those funds realized that the opportunity has suddenly ceased to be relevant because various of those sectors were the worst affected because of the pandemic and lockdown. Now, what happens on the future? And perhaps while my original question was for Guy and Gaurav, but I'll let it be open to all the panel members. From a future perspective, because the pandemic has been an eye-opener of sorts, have you seen your all your investment strategies being recalibrated? Have new sectors come to the fore? Have certain sectors gone out of your core focus areas? At least the R&D saw a strong focus over the last year on debt, special situations, etc. So, from your perspective, how have things really changed in terms of your sector focus, in terms of the kind of investments, the kind of asset classes which all of you are looking at? And perhaps we could start with Guy, Gaurav, Manav, and Shilpa.
I'll go first if you want, Divas, but I think it seems to be addressed to all of us. I mean, I don't think I'm going to speak too much in terms of whether we've changed our sector focus so much as a consequence of COVID, because I think that the impacts have been diverse and different across different sectors, as Manav and Shilpa have also highlighted. I think that one of the big lessons for me has been that resilience has been incredibly tested, and particularly social has been perhaps now prioritized on a level with environment, and that has not always been the case in the investment space. And sort of this focus on how can you protect jobs, how can you create a safe working environment, given all the constraints that Manav rightly highlighted in the SME space, has remained something that's particularly important to investors right now. And I think that that's also a bit of a future lesson as well. I think you'll see limited partners asking increasingly, how did you, general partner, help support your companies in this space? What tools did you use? Was it advisory? Was it capital? What resource were you able to take to the market there? So I think that has been a bit of a paradigm shift. And I think that will be, it's not so much the sector to me that will change, but it's sort of the discourse with regard to social.
Yeah, that's
interesting. Thank you. Gaurav, how about at your level?
Yes, so I agree with what Manav and Guy are saying. I think it's more fundamental. It's been a fundamental shift in terms of the business strategies and approaches that we've seen. For us, it just tells us that there are certain trends, top tier trends, whether it was about climate change, etc., which just needs to get even more quickened. And I think the urgency that needs to come behind those agendas from a government's perspective has been doubled up. But having said that, I think there is also some welcome signs. Like there were certain policy gaps. You know, women in the workforce in India is at a low number, and it's hurting India's growth as per what it could be. So has this, has COVID taught us about all of us being forced to work remotely? And can that now get more women into the workforce? Can we be more inclusive to, with using tech to get more people with disabilities contributing to the mainstream agendas, to mainstream businesses? And how are we passing that consciousness back to entrepreneurs and fund managers who are, like what Manav was saying, on the one hand, they're struggling just to keep the business alive. And then, there is also an ability to try and do good and lay the foundations, solid foundations of ESG that they can then, ride the wave and really get to the next level of delivery of where the investors are there. And it's an opportunity for all fund managers and entrepreneurs. How well they respond to it will show in due course, and investors are on the lookout for it. And they will disproportionately reward those who have, in this very difficult time, done the right things on an ESG perspective, and not reward, I'm afraid, those who have not done this so well. And therefore, the track record over this time will definitely come to bear in the next couple of months.
Yeah. Yeah. And Gaurav, why do you call this an opportunity? Can you say that again for us?
So, yeah, so I think the opportunity was about how, when all of us were forced to work in a remote way, is there a learning that we've all learned about how we can be more inclusive to get more women in the workforce, more options for remote working, part-time roles, getting more creative in companies in terms of how we look at our workforce in a very inclusive manner. And then on certain businesses, can we double down on certain challenges that we're seeing? For example, climate and others is what I was saying as opportunities, big opportunities that we're seeing, and opportunities for people in India, entrepreneurs in India, to also work with other regions. So if India has the talent, and India is a laboratory for technology, startups, new ideas in an ESG friendly way, then can we take those ideas to other countries and really accelerate the world's journey towards global goals 2030?
Thank you, Gaurav. I wanted that to be sort of really clear, which is why, I asked that question again. Yes, that's very helpful.
Just an interesting insight, Gaurav, on gender diversity and inclusion. In fact, not taking the credit away from any of those star partners who got promoted this year, but this year, actually, of all the partner promotions at Ketan, 50% were actually women. So,
yes,
absolutely. You, of course, is one of them. So, congratulations to all of them.
Absolutely. And with that, we'll move to our slides where we'll involve the audience. Shall we do that, panelists? We'll move to our polling slides. Can you go to the next slide, please? And the objective of this is really everything that we've discussed till now. We want the audience to give us a sense of what they feel, what their thoughts about each of these questions. And also, it'll help us understand how ESG will play out going forward. So, Devas, if you can just explain what the audience has to do here, and we'll take the answers and discuss it with the panelists.
It's very simple. You see the question and a bunch of choices in front of you on your screen. Please select which of the options you think is most relevant. You can just click on that option which is coming on your screen. The first question is, of course, what are the top myths to dispel about ESG? There are 5 choices. Here is the first question. What are the top myths to dispel about ESG? All you need to do is just select one which you think is the most relevant as per you. And depending on what the responses are, we'll then request our panelists to throw some light on that. So, okay, can we have the responses, please? Interesting. A majority have voted ESG is not mainstream. Then it is ESG does not increase returns. That's the second top myth. Of course, followed by costs for ESG compliance outdo the benefits and long investor holding periods required to unlock value. Guy, with that, let me turn my attention to you. What do you think about these? Do you think these are the top myths, or there is something else which you have faced from a practical perspective as you deal on the ESG front quite regularly?
Yeah, interesting. I mean, I'm interested actually by such a sort of diverse range of responses to that question that that doesn't surprise me actually. I think that in a sense to see that the challenge that ESG is not mainstream is perhaps not surprising, simply because I think that ESG, is kind of heard from all the panelists today, comprises a vast range of different things to different people. There's risk management, there's impact, there's gender, diversity, climate, and I think that it really does need investors and companies to sort of almost like prioritize and define what is it that really matters to them. And at that point, it does become what I said at the beginning. It's about effective risk management in operations. And in that sense, I think you can dispel the myth that ESG is not mainstream and does not even increase returns quite quickly, because you're narrowing down from the sort of the macro to the specific. The other thing I'd just say in response to all of the choices here is that I think language really does matter, and I think if you label ESG as simply about compliance, I think that misses something. I think if you start talking about value creation where we started, or even in terms of risk management, which means it's long term and about prioritizing, working over time, and mapping with portfolio companies, I think that really does dispel all of the myths to an extent here, and it allows a discourse between investor, government, and company.
Interesting. Thank you. Thank you so much for that.
Yes, yes. And I must say that value creation and not only about compliance, I think that's something we must sort of register. Very, very, very helpful. Can we move to the next?
Next poll question, please.
Yeah. Okay. So I'm going to, so post-COVID, which do you think will be the real priority sectors that will need and see ESG focus? So here you'll see your options, and we'll give a few seconds for the audience to enter their poll, their choices. A couple of seconds more, and then you can reflect the answers. Okay, so this seems like an overwhelming, of course, not surprising to say healthcare 61% and infrastructure 35, education 10. Manav, before I ask you this question, ask you whether you agree, I actually thought we would see education also because EdTech, the kind of flurry we've seen, especially in the firm, we've done several investments in the ed space in the last year. Including advising SoftBank investments in Unacademy and the Byju's acquisition of Akash Education. I think I was actually presuming we may have education being a good competitor, but I will ask you whether you agree.
You know, and I would actually tend to agree with you, Taruni, 100% that education is perhaps the sector which needs a lot of focus. And if I could just circle back to what you was earlier mentioning about inclusion, because what we have seen in the hinterland is that because of school closing, a lot of girl children have actually dropped out of school, and unfortunate reality is that a lot of them have got into workforce. With COVID, with the economy reopening, it is just our hope and pray that a lot of them actually come back, because the travesty would be that students who dropped out and got into workforce will become a permanent. So it is incumbent upon impact investors such as ourselves to find ways and means of bringing them back into mainstream. So I would say that education is a very, very important piece.
Okay, great. I think then let's move to the next polling question. Okay, so what are the key ESG challenges in India today? lack of data to support ESG scoring or indices. Traditional companies still believe that there's no monetary return from ESG. There is insufficient market material to demonstrate ESG advantages, or is there a lack of standardized ESG metrics? We'll wait for a couple of seconds for the audience to review and respond. Okay, so on top we have, okay, this is interesting. Gaurav, this is for you. We see that traditional companies, the audience believes that traditional companies still believe that there is no monetary return from ESG. So I think they still believe that it's just a compliance, tick the box, just alluding to what Guy said, very different from what we believe, but it's actually just a tick the box and not value creation or even no returns really. What do you think?
Yes, I think it's interesting. So if you look at the four questions, actually the first one and the last one, if you combine them, then there is a bit of a bucket on, what is the metrics, how does the scoring work? So that's one. And if you combine the second and the third choices, those are about, who believes about monetary returns and is there evidence in the market to convince people. And if you look at the scores,
Yeah.
effectively it's 50-50 on both these buckets. That has come out. And I think there is some truth to it because it is true that there are, ESG, how does it apply to different sectors? It's not very clear often to traditional companies in India and in other places as well. And we feel that the asset management industry with the LPGP model can play a real difference because that's about informing, educating, and that's where many of these companies get their subsequent rounds of funding. And that's where this becomes important. So there is nothing stopping a traditional company to go on or carry on with their business as usual. But then they will not be able to scale up more and they will not be able to get more money in the future. That's going to be very sharp as a contrast. So I think there is merit in terms of what the audience has said, that is the current belief. I do believe, like I said, that fund managers like Manav and others, Shilpa, do work with their companies to try and make sure that they can help them understand the value addition, the value creation, the value benefits of ESG in that sense. But as an industry, I think it's also humbling and sober because we do have a lot of work to do. And thanks to Ketan for platforms like these, which are about trying to bring that discussion topic and trying to mainstream it. Thank you.
But Gaurav, that's very interesting, and I just want to pause here for a minute. So, what are you saying is the one real thing that is needed to bring that mindset shift? Can you give us one real need of the moment?
So, for example, we are working with the UN and others to try and work out on how do companies, top 100 corporates or listed, contribute to the SDGs and how are they looking at ESG as well as an important factor. I think the one thing that we also need is successful role models. So if we have certain companies who have done really well and they then get on further funding and they can make a virtue of ESG in terms of not just a check mark, but mainstream in their business model, that can take us further a long way.
Excellent. Thank you so much, Gaurav. With that, Divas, would you like to take the last question?
Yeah. Can we have the next question, please? The next question is, which tools can help steer all ESG challenges as discussed above? Strong ESG policies, voluntary reporting of data, better market standards, better legal enforcement mechanisms to ensure ESG compliance. In fact, now since we've had this discussion, I'll let our audience vote on this one for a few seconds.
This is what will help us understand really way going forward, Divas. I think in terms of addressing everything that we've discussed, takeaway for all of us.
Yes. In fact, while I was going through the question, I just realized, based on our discussions, one interesting thing which Shilpa had mentioned was that there has to be a lot of voluntary initiative also, because they also want to partner with entrepreneurs who themselves are driven with a impact focus in mind. The responses seem to, better market standards to measure ESG compliance, followed by strong ESG policies and continued monitoring. And of course, on the other side, as we were discussing, we've also seen fair bit of policy intervention, both by government and also by a lot of our panel members here working with the government. So both of those seem to be on point. And legal enforcement and voluntary reporting come last. With that, Shilpa, just moving to you, do you broadly agree with this analysis? Would you have a different view in terms of what the audience thinks?
Yeah, actually, I agree with the audience on this, Devas, and it's not contradictory to what I said earlier, because what I spoke about was our model of impact investing, which is impact first. And I think the question here is really about ESG as a standard, for businesses of all types, really, to adopt, a more sustainable, equitable model. And actually, I completely agree with the audience choice, which is choice 3, because let me reflect a bit, for example, on my own background. I was a banker in my previous life, and essentially, if you think about financial reporting of, let's say, bad debts and non-performing assets, if you didn't have a standard, you couldn't really gauge which bank was doing well, because everyone might report bad assets in a different way, and you might think a bank to be a better investment when it was not. Having said that, I feel the entrepreneurs need an incentive. So if you go to an entrepreneur and say, hey, adopt ESG, of course it comes with much more difficult choices, and I think that incentive is really what investors and funders do. And if investors and funders kind of say, hey, if you adopt these standards, and these are certain kind of what do I say, public standards or internationally accepted standards, we then know that this is how you measure things, this is how you do stuff, and we are therefore happy to give you money for what you're doing. And I think that can be a really good incentive for what entrepreneurs might want to do, but otherwise not do unless they had that incentive. So really, I think better market standards is important because it evens the field for investors who are making that call. Thank you.
Interesting, Shilpa. And Shilpa, we saw that there have been some standards laid down by BSE while analyzing some of these listed companies. There's this separate green bond issuance guidelines which have been introduced again by SEBI. On the private equity side, like pure play unlisted, Guy mentioned that CDC essentially follows the IFC standards. Are there any set standards and principles which you follow, or these are more internal policies which you follow? Is there something which can be sort of regularized for the entire private equity industry?
Yeah. So there was just want to touch again upon the point Manav made, that as a impact investor, what I spoke about really was our own impact investing thesis, which desires a certain social purpose, and then we invest towards it. I think ESG is a broader set of standards which maybe all businesses can adopt. And I think what CDC has put out, IFC standards, these are all good North Stars to kind of think about for most investors to try and frame. It's something that we ourselves are thinking about. We are right now not a signatory to any of these standards, but certainly these are things which we are thinking about, because I think if one thing that COVID has shown us, it's that sustainable, equitable world, if we want one, then we need to have sustainable, equitable businesses. So I think there's no choice there, really.
No, absolutely, absolutely.
That's helpful. So I'm conscious of the time. So what we're going to do is, I still, Devas is saying we should go to the Q&A, but I'm still curious to just get 10-second quick, if you can move the next slide, please. 10-second, very quick sort of elevator speech from each of you, and then we'll quickly move to take a couple or two questions from the audience. So I'm going to ask without any sort of gap in between. We're not going to react. We're not going to interrupt any of you. If we can go with Guy, Shilpa, Manav. Actually, let's go with ladies first, given everything that we've been discussing. Shilpa, Guy, Manav, and Gaurav in that order, and then we'll quickly jump to Q&A. Yes, please. Your 10-second start now, Shilpa.
Sorry, Guy or me first? Sorry.
No, we are going ladies first. We are going ladies first. Yes.
Oh, sorry. I thought you were waiting for. No, I feel you know, doing good is pretty much good business and good investment, and I think ESG standards kind of show maybe a way to getting that done.
Excellent. Yes, Guy.
I mean, I think that's very wise advice. I think the next step is all about how it becomes integrated into the governance of companies, and so it's that boards, management, and shareholder are all thinking alike.
Great. Manav?
Yeah, I'll take it a bit personal and say that you know, one had to be particularly fortunate to be in a space where you're actually getting paid to do the Lord's work and try and help the many with lives and livelihood. I'm really fortunate more than anything else.
Fantastic. Gaurav?
Yeah, so I would just say that, you know, sustainability is profitable. It is really the new reality, and we all must do our best to try and think holistic and just follow this new path. Thank you.
Excellent. Thank you so much. Thank you all. Devas, you want to move to the Q&A from the audience?
Yeah.
I think we have time for just about one question, perhaps.
Yeah, if the audience can, you know, post their questions, we'll be happy to take them out with our panelists.
Yeah, next slide.
If you could go to the next slide, please.
We'll wait a couple of seconds. We'll just, I think we'll receive it on our emails or chat box with us, so we can just raise that to the panelists.
Yeah.
Devas, would you want to take the question? I see them pouring in.
Sorry, I can't see them, Tarun, on my thing. Do you want to take them?
Okay. Yeah, I've got a couple. Just give me a second. Okay, so I'm just going to pick up one really interesting question that I see here, and I'm going to just throw it out. It's actually very similar to what Guy you mentioned. So I mean, you may want to respond, or any of the other panelists. But the question here from the audience is: are ESG factors more important for risk management or value creation?
I mean, I would say both. I mean, I think you can't have value creation without risk management, because risk management is all about building the systems and the processes from which everything else follows. But ultimately, good impact is value, and so we want to do both, and that is ultimately the target of investors and many company managers.
Absolutely. Thank you so much, Guy. Does anyone else want to address this? Okay, so I think all of us agree that companies must embrace ESG, and we all hope that the pandemic really serves as a clarion call for companies to see the merit and use ESG to build resilience in future. I think that's something we all agree and is a key takeaway.
Actually, before we conclude, just one question from my side. I'm just out of curiosity, and this may be a personal question. And of all the larger ESG and its small subsets and typical issues, what are you the most driven by personally? What are you most passionate about? And this is to all our panel members. I'll start off with myself. I'm very, very passionate about water conservation, because I come from the desert land in India, which is Rajasthan. I'm very conscious about water conservation, and also pre-primary education in a country like ours. So that's what drives me the most, at least on the ESG front. And just like to understand, what drives you the most on this front. Guy, we could start off with you.
Putting us on the spot, Divas. I think probably, one of the things I'm really passionate about, and to contrast you slightly, is sort of equitable terms and conditions of employment. I think that is ultimately a route out of poverty for so many, and I think that needs to be not just in companies, but down the supply chain as well. For anything companies can do to drive that is something that makes me really passionate.
Thank you. Thank you. How about you, Shilpa?
Yeah, I'd say it's really between the E and S part of it, and it's like choosing your favorite child, because while one might, say, the S part is more important. Frankly, you can't live without the E either. I think governance is something which is a little bit more. You can't say it's your favorite, but it's something that's required. So again, like discipline for the favorite child, you need the G as well.
Very well put. Madhav and Gaurav?
How about you? Yes, Madhav and Gaurav.
From my perspective, a desire to prove the model that the sustainable upliftment or change comes through commerce, not through charity.
Absolutely.
Very interesting.
It's great that we're ending with that, Manav.
Yeah. Gaurav, over to you.
Has Gaurav's screen frozen for all of you or only for me?
Yeah, I think there's some network issue. Saria, why don't you give us what you are most passionate about?
I'm most passionate about conveying the message that passion can come with profits as well. And I'm very glad that Manav said that, because it's a good cause, but it's absolutely mainstream and absolutely value creation. So I'm going to go on a tangent when answering that question, Devas.
Thank you.
So I think, Devas, you can, unless Gaurav, you should we wait a second? If not, I think you can conclude.
So yeah, no, I was just saying, I don't know if I'm audible. Am I audible?
Yeah, you are. You are.
We can hear you now. Yes, Gaurav.
Okay, so then I was saying that it's equality and equity, and the fear of karma that should drive our collective dharma.
Ah, lovely.
Wonderful.
Ended with a punch. Thank you so much, Gaurav.
Look, with this, I would. Wow, it's been almost an hour and a half, and it's been such an engaging and fruitful discussion with all our esteemed panelists here. Our sincere gratitude to each one of you, and a big thanks for being present, and a big thanks to also all the participants who could come and join us for today's webinar. Should you have any queries, all of us are available to take your queries, dispel any myths which you may still have about ESG. Thank you so much for joining us today on this webinar.
Thank you so much. It was very, very insightful. Thank you.
Thank you.
Thank you, guys.
Bye-bye.
Bye-bye. Good day, good evening.
Thank you. Good evening.
Yeah.